China Plus One Strategy and Sector Preferences. Introduction. In recent years, global businesses have started rethinking their dependence on a single manufacturing hub. One major outcome of this shift is the China Plus One strategy, where companies maintain operations in China while expanding production into other countries. This strategy has become an important trend in global trade, supply chains, and investment decisions. It is reshaping manufacturing locations and creating new opportunities for emerging economies. What is the China Plus One strategy? The China Plus One strategy refers to a business approach where companies continue manufacturing in China but add at least one additional country to diversify production and reduce risk. For decades, China was known as the world's manufacturing center due to its strong infrastructure, skilled labor, and large-scale production capabilities. However, rising costs, geopolitical tensions, and supply chain disruptions encouraged companies to look for alternative locations. Instead of completely leaving China, firms are spreading operations across multiple countries to improve resilience and flexibility. Why companies are adopting China Plus One? Supply chain risk reduction. Events like global pandemics and trade conflicts showed how dependence on a single country can disrupt production and deliveries worldwide. Rising manufacturing costs. Labor and operational costs in China have increased over time, making other countries more competitive. Geopolitical and trade factors. Tariffs, trade restrictions, and political uncertainties encourage companies to diversify manufacturing bases. Market diversification. Companies want production closer to growing consumer markets in Asia and other regions. Countries benefiting from China Plus One. Several countries are emerging as alternative manufacturing hubs. India, strong domestic market, government incentives, and expanding infrastructure. Vietnam, competitive labor costs and strong export growth. Indonesia, growing industrial base and natural resources. Mexico, advantage of proximity to North American markets. Thailand and Malaysia, established electronics manufacturing ecosystems. These countries are attracting global investments in manufacturing and supply chains. Sector preferences under China Plus One. Certain industries are benefiting more from this strategy. Electronics and semiconductors. Companies are diversifying assembly and component manufacturing to reduce supply risk. Automobile and EV manufacturing. Electric vehicle supply chains are expanding across multiple Asian countries. Textiles and apparel. Labor-intensive industries are shifting to lower-cost regions like South and Southeast Asia. Pharmaceuticals and chemicals. Firms are building alternative production hubs to ensure uninterrupted supply of essential goods. Consumer goods and mobile manufacturing. Smartphone and electronics brands are increasing production outside China to serve regional markets efficiently. Impact on global economy and investors. The China Plus One strategy is changing global investment flows. Countries receiving new manufacturing investments experience job creation, infrastructure development, export growth, increased foreign direct investment. For investors, this creates opportunities in sectors such as logistics, industrial parks, manufacturing companies, and infrastructure development. Stock markets in emerging economies may benefit as companies expand operations and production capacity. Challenges of the China Plus One strategy. Despite its advantages, the transition is not easy. Building infrastructure takes time. Skilled labor availability varies across countries. Supply chains cannot be shifted overnight. Companies still rely heavily on China's established ecosystem. Therefore, most businesses follow diversification rather than full relocation. Future outlook. The China Plus One strategy is expected to continue shaping global trade for the next decade. Instead of a single manufacturing center, the world may move toward a multi-country supply chain model. Technology, automation, and regional trade partnerships will further influence where companies choose to manufacture. Countries that improve ease of doing business, logistics efficiency, and workforce skills are likely to gain the most from this transition. Conclusion. The China Plus One strategy represents a major transformation in global manufacturing and investment patterns. By diversifying production beyond China, companies aim to reduce risks, while maintaining efficiency. For economies and investors, this shift opens new growth opportunities across multiple sectors and regions, marking a new phase in globalization driven by resilience and strategic diversification.